Alex Koyfman is back with another big claim, saying that a tiny company has developed a breakthrough technology that could power every AI data center, and that this stock could see an incredible gain of over 96,000%. The stock will be revealed in this video, so viewers don't need to pay for the information. No paid or proprietary info is shared here. This is all based on publicly available clues. Before diving into this new stock recommendation, let's take a quick look at Alex Koyfman's recent stock picking history to help us assess how reliable his picks are. In February 2021, Koyfman recommended Fuel Positive. The stock did well initially but has dropped significantly since its brief surge. He also recommended JBY Aviation in December 2021, which was a poor pick, as the stock has struggled since. Another recommendation, Burna Technologies in January 2022, did very well at least until recently, still managing to double in value since his recommendation. Koyfman re-recommended Fuel Positive in February 2022, but this turned out to be an even worse time to make that pick. He also recommended Nex Innovations in February 2022, and like Fuel Positive, that stock didn't perform well. In May 2023, Koyfman picked Graphene Manufacturing Company, but it didn't perform well either. However, his pick of Vault Lithium in August 2023 has shown gains since. Now let's focus on Koyfman's latest stock teaser. The theme of his pitch is the AI revolution and the challenges that AI data centers are facing. Here's how Koyfman explains it. But despite its incredible potential, the AI revolution is hitting a massive roadblock: data centers. The critical infrastructure behind AI simply can't keep up. He says 95% of America's current data centers are not equipped to handle the immense scale and speed required for modern AI workloads. He goes on to say AI requires far more advanced infrastructure than traditional data centers were ever designed for. AI needs faster chips, more efficient servers, advanced cooling systems, and much larger physical spaces to store and process data. Koyfman then provides a solution to this by saying, amid this trillion-dollar race to build AI data centers, one small tech company has developed a revolutionary device that solves the greatest infrastructure challenge for AI, the ability to process and transmit data at lightning-fast speeds. According to Koyfman, this isn't a microchip, and it's not a USB flash drive. This breakthrough device is the key to unlocking the full potential and promise of the AI revolution, because it not only addresses AI's need for speed, but also dramatically reduces the cost of building new data center infrastructure. With thousands of these devices required for every data center, both existing ones and those yet to be built, it's no surprise that AI giants like Nvidia, Google, and Meta are already embracing this revolutionary technology to power their AI-driven data centers. Koyfman expands on this and says, and it all starts with a tiny yet critical device called a transceiver. Despite their small size, transceivers are absolutely essential. No data center can function without them. In fact, they are the single most used piece of technology inside data centers. So, what exactly does a transceiver do? Transceivers are responsible for transmitting and receiving data between servers. They act as the communication bridge within the data center. Koyfman asserts that these small devices are absolutely necessary for data centers to function. First, transceivers take the electrical signals generated by AI chips and convert them into light. This conversion is key because light can travel through fiber optic cables at incredibly high speeds with minimal signal loss. The light then travels through these fiber optic cables to its destination, carrying massive amounts of data across vast distances in the blink of an eye. Lastly, he says this process ensures that data can be transferred quickly and reliably between different locations in the data center, which is crucial for handling AI workloads that require vast amounts of data to be processed in real time. What makes this company's technology stand out is that they've developed an innovative way to automate the production of transceivers. He says this innovative firm has developed a revolutionary device that automates the production of transceivers, a solution that addresses the key challenges of cost, speed, and energy consumption that have held back AI infrastructure for years. Instead of relying on manual assembly, this company's breakthrough solution integrates all of the components needed for a transceiver, lasers, detectors, filters, and more, onto a single chip. By automating this process, they've eliminated the inefficiencies of manual alignment, reduced the risk of human errors, and enabled the mass production of transceivers at significantly lower costs. This company's innovation doesn't just speed up production, it transforms how data centers operate. Now, based on the clues Koyfman left in his presentation, it's clear that the stock being pitched is POET Technologies with ticker POET. The stock price for this company is around $4, and Poet Technologies specializes in improving AI data center efficiency by making transceivers more cost-effectively and efficiently. The company's focus on photonic technology, combined with its automation of transceiver production, makes it a key player in the rapidly growing AI infrastructure market. Poet Technologies is known for developing advanced photonic devices, which use light to transmit data, improving performance and energy efficiency for electronic systems. The company integrates photonics with semiconductor materials to create platforms for optical communications. These platforms could potentially revolutionize industries like data centers, telecommunications, and computing, positioning Poet Technologies as an important company in the AI and data center space. Here's what you should know about investing in Poet Technologies. First, the company's revenue is still quite small. Analysts predict just $50,000 for the fourth quarter of 2024. A significant drop from last year's $118,000. This means that Poet is still in its early stages, and could be a highly speculative play for investors looking for explosive growth. Second, Poet's stock has surged 180% in the past year, demonstrating strong investor excitement. However, such volatility can go both ways, meaning that while there's potential for significant gains, there's also the risk of big losses. Third, Poet is positioned to benefit massively from the AI boom, especially as hyperscalers like Microsoft and AWS invest heavily in AI infrastructure. The demand for 800 gig and 1.6 terabit transceivers is expected to skyrocket, and Poet's technology is well positioned to capitalize on this trend. Fourth, the company continues to report losses each quarter. Wall Street expects a 6-cent per share loss for the fourth quarter of 2024, so if you're looking for stable dividend-paying stocks, Poet isn't the right choice. This is a growth stock that comes with a high level of risk. Fifth, Poet has established strong partnerships with major players like Foxconn and Luxshare Tech. These collaborations could help Poet tap into the high-speed solutions needed for hyperscale data centers, opening up more opportunities in the market. Sixth, Poet's current market valuation is considered quite high compared to its revenue, with a market cap of $326.4 million. Investors may be paying a premium for future growth, but that comes with significant risk if the company fails to meet expectations. Seventh, Poet is expanding its manufacturing capabilities, ramping up production to meet 8% of the demand for 800 Gbit and 1.6 terabit transceivers. While this could lead to significant growth, the execution risks are considerable. 8. There's the risk of external factors, such as trade tariffs and economic uncertainty, which could disrupt Poet's supply chain or customer demand. These macroeconomic factors could impact on the company's growth prospects, especially in the short term. Lastly, analysts are optimistic about Poet, with a median 12-month price target of $5.75, which is above its last close of $3.29. However, these price targets are not guaranteed and should be taken with caution. Despite the excitement surrounding Poet Technologies and its innovative technology, there are significant risks associated with investing in this company. If you are looking for a high-growth opportunity in the AI and data center space, Poet may be worth considering, but keep in mind the speculative nature of this investment and the potential volatility. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.